This and all the company news of the day. Chris Conway from the Australian Stock Report joining us live from our Melbourne studio. Chris, thanks so much for joining us today. Just
Good morning.
On that mining story, actually, just looking at the miners today, despite the iron ore price falling below that $55 a tonne mark, we're seeing all the miners in the black. BHP and Rio, BHP up by about 1.3%. Green across the screen, though I guess this is probably more Fed related.
I would think so. I would think it was definitely a function of what the Fed did overnight. They really created a lot of stability and certainty for the market. We all know that markets hate uncertainty, so yeah, the market's just ignored the fact that iron ore prices tanked again overnight and pushing the iron ore plays higher. Interestingly, we also thought that US dollar denominated, or companies with US dollar denominated earnings would be weaker this morning, but again, they've bucked the trend as well, or bucked the theme, and are pushing higher as well. So yeah, it's all about the Fed this morning. It's nice to see some green on the screen.
Yeah, but do you think it can continue? Is this just a bit of a knee-jerk reaction to the more dovish sentiment? I mean, we do know that rates will go higher in the United States.
Yeah, probably a bit of a knee-jerk reaction. I think the other thing that people are taking into consideration is that locally the RBA is still likely to cut rates sometime in the next few months. So that should provide some support locally as well. But yeah, I don't think this is a theme that's going to continue longer term. Definitely a reaction to what the Fed did overnight. Okay,
let's talk some company news we're watching quite closely today. Myer out with its results. Of course, Richard Umbers delivering these for the first time. Bernie Brooks obviously departing as CEO. Just talk us through what you thought of the result, because obviously the market not liking it, down 7.7% right now.
Yeah, look, a really disappointing result from Myer. Everyone had thought that the results were going to be disappointing, perhaps not this disappointing. A huge fall in profit, margin pressures and increasing costs. So on all fronts, Myer not performing as well as even what people had expected. Look, it's a really troubled company. The problem for Myer is, where is growth going to come from? The Australian consumer at the moment just doesn't want to be buying luxury items. Consumer sentiment is low, so whether Myer recovers, it's really going to be a function of the Australian consumer rather than anything that they can do. So it's really a waiting game for Myer. Probably one for the shorters out there. We think it will move lower in the near term.
Really? I mean, it's got this new strategy that it's announced, obviously a greater focus on omni-channel. Is that a necessity? I mean, is that sort of a catalyst for it turning around in the future?
Yeah, look, I think it is. One of the things that I've taken into consideration with Myer is their growing online sales and the revenues that they can draw from that. Still in its infancy, however, so yeah, the overarching theme again is the Australian consumer who just, like I said, doesn't want to spend money on luxury items at the moment. It's something that we've seen with Oroton this morning as well. So really it's about consumer confidence when that turns around, when that picks up, and when the Australian consumer wants to reach into their pocket and start spending some money on these luxury items that Myer and Oroton produce.
Just while we're on it though, it's also quite a competitive environment, isn't it? I mean, and just what sort of impact does it have that DJs has, you know, been bought out and delisted?
Yeah, well, the thing with DJs there is now that they've been taken over by that South African entity, potentially they will be able to source goods cheaper. So again, it will create more competition and put downward pressure on Myer's prices. And in terms of competition, you're exactly right. The Australian consumer, they can go online, they can find things cheaper. There's a myriad of alternatives. They don't really want to walk into stores at the moment and spend top dollar on a product from Myer when they can get it cheaper somewhere else.
Do you think,
extremely competitive environment.
Do you think the department store model is actually dead in Australia?
I honestly do.
Yeah.
I think it's dying a slow, cruel death. I think Myer will probably have to reinvent itself again before it sees any turnaround. But even then, like I said, it's more so a function of the Australian consumer and what they're going to do, and we can't see any significant improvements that will turn that story around in the near term.
They are working on their online strategy, though. Is it just not? They need to bolster that more in order to sort of reinvent themselves?
I would think so, yes. They didn't have any specific numbers out today in terms of growth. They did say the segment had grown and they were drawing more revenue. I think that's one area that they, specifically the company, can improve to get a better bottom line result. But again, the overarching theme with the Australian consumer is really what dominates the action there.
And you mentioned Oroton as well. It's down about 5.6% right now, and obviously this store's seen quite a bit of discounting. It's also opened had a bit of costs with this Brooks Brothers and new Gap stores, which have dragged on the bottom line. But in terms of rate cuts here in Australia, why are we not seeing that flow through to these retailers, do you think?
Look, that's a really good question. Again, it's a lagging effect, I guess you'd say, and it's just about consumer confidence. I mean, if the RBA cuts again, which they're expected to do, that might provide a little bit of a lift for these retailers. But also, it's the space that they operate in. It's the luxury end of the market, and people are just unwilling to spend money on those big ticket items.
All right, Chris, we might leave it there, but thanks a lot as always.
Thanks, Ingrid.
Chris Conway there from the Australian Stock Report out of our Melbourne studio.